Okay, so before we jump into this week's deep dive, just a quick reminder. What we discuss here is purely for educational purposes
Good.
and absolutely not investment advice.
Definitely not.
Please remember all investments come with some level of risk.
Indeed.
So let's dive in, shall we? This week has been, well, let's just say it's been pretty wild in the world of digital assets.
It has.
A ton of market moves and regulatory chatter, and, well, it can be hard to keep up, honestly.
It can.
So we thought, we'd pull out some key developments to help you guys navigate the space.
Exactly. We want to cut through all the noise and highlight what really matters.
Right. And maybe even bring up a few things you might have missed in the headlines.
Absolutely.
Okay, so let's start with Tether. This one really caught my eye. Apparently, Tether was the 7th largest buyer of U.S. Treasuries in 2024.
Wow.
Yeah, I know, it's crazy. That puts them ahead of countries like Canada and Taiwan.
Yeah, that's huge.
Yeah, I mean, for a stablecoin issuer, that's a pretty massive footprint in traditional finance, wouldn't you say?
Yeah. Oh, absolutely. It really shows the scale we're talking about here.
Right.
With their USDT market value being somewhere around $143.5 billion.
Wow.
And over $113 billion parked in U.S. government securities. They're not just some small player anymore.
No, they're not.
And for the listener, what this really means is that USDT is significantly backed by what is considered a very safe asset class.
Right.
But on the other hand, it also kind of concentrates a lot of power with a single entity,
Right.
which is something that regulators are definitely keeping an eye on.
Right. And, even though there's still those regulatory questions swirling around Tether, you can't ignore how important they are to the crypto trading world.
Yeah,
It seems like everyone uses that stablecoin.
precisely. And despite all the scrutiny, their market dominance is still there, and these treasury holdings just kind of amplify their role in the broader financial picture.
It's fascinating, isn't it?
It is, and it raises a big question, what will the relationship between these privately issued stablecoins and government-backed assets look like in the future?
Yeah, that's a good question.
Yeah.
Okay, moving on. We also saw some interesting comments from President Trump regarding crypto.
Oh, yeah.
He spoke at a digital asset summit, and he kind of laid out a clear vision of, the U.S. leading in the crypto space.
He did, and he really, put emphasis on the idea of the U.S. being at the forefront of cryptocurrency and fintech innovation.
Right.
And what I found really notable was his direct call to end what he called the regulatory war on crypto and Bitcoin.
Right.
He framed it as something that, the previous administration had started.
It was very interesting how he framed that.
And it was.
He specifically urged Congress to get moving on establishing clear rules for stablecoins and the overall market structure.
Yeah.
It really seems like he sees crypto as a vital part of America's future in finance.
Yeah, that's definitely the message that he wanted to get across.
Yeah.
And, if we think about this in relation to his broader economic platform, it gets really interesting.
In what way?
Well, he also announced new tariffs on imported cars and other sectors. He mentioned this country-adjusted equal tariff system,
Right.
but with more details to come soon.
Interesting. So on one hand, he's championing crypto innovation,
Yeah.
but then on the other hand, he's signaling a more protectionist trade policy. Those seem like potentially competing economic forces.
They do, and it's something that market analysts are very aware of.
I bet.
For example, Citigroup has already given their opinion on how these new tariffs might impact the markets.
I see.
So the interplay between, a potentially more crypto-friendly regulatory environment and these new trade barriers
Right.
could create some really complex market dynamics that people should watch.
Yeah, definitely something to keep an eye on.
Mhm.
Okay, let's zoom in a little on some specific regulatory developments in the crypto world.
Okay.
The U.S. Senate voted to repeal a controversial crypto tax rule.
Yeah,
That was a bit of a surprise.
it was. It was a significant bipartisan move.
Right.
To overturn a rule that many in the DeFi space thought was overly burdensome and kind of ambiguous,
Right.
this rule was introduced towards the end of the previous administration.
Right.
And it would have required DeFi platforms to report user transactions in a way similar to traditional brokers.
I see.
And this was seen as a major obstacle to the growth of decentralized finance.
And now this repeal heads to President Trump, who, given his recent pro-crypto statements, seems likely to sign it right.
Most likely, yeah. And that would be a pretty big deal for the industry.
Yeah, it really would. It would suggest maybe a shift towards a less restrictive approach, at least when it comes to this specific area of taxes.
Right, it does. But it's important to remember that the underlying need for some level of clarity and reporting within DeFi isn't going to just disappear entirely.
No, of course not. On the enforcement front, the SEC seemed to have been a little less active lately.
It seems that way.
We've seen them dismiss lawsuits against some major players like Kraken Consensus and Cumberland.
Right.
And plus, there are reports that their investigation into Crypto.com has ended without any action.
Interesting.
Do you think this could be a sign of a change in their approach?
Well, it's definitely open to interpretation.
Right.
It could mean they're reassessing their enforcement priorities, maybe due to, the changing political landscape.
Right.
Or maybe they're recognizing the unique challenges involved in regulating these new technologies.
Right.
Now, a more cynical take could be that they're just finding it hard to build strong cases that they can actually win in this area, which is so new and complex.
I see. But, it's not all smooth sailing on the regulatory front.
Not quite.
We saw some Democratic senators voicing concerns about the Trump family's USD1 stablecoin.
Yeah.
They specifically mentioned potential conflicts of interest, which makes sense given the circumstances.
Oh, absolutely.
Yeah.
The involvement of a former president's family in launching a stablecoin,
Right.
it naturally raises questions about, potential undue influence or preferential treatment, regardless of whether those concerns are actually justified or not.
Right.
It really highlights how sensitive things are when you have politically connected ventures in the crypto space.
Okay, let's change gears a bit and talk about Binance. They've also had a busy week.
They have.
They launched this Vote to List initiative for meme coins. It's like a popularity contest for these super speculative tokens, isn't it?
Yeah, you could say that. It's kind of a community-driven way to decide which new tokens, particularly meme coins, which often gain popularity through social media hype, will be listed on their platform.
Right.
And Binance has set some specific criteria.
Like what?
Well, they're looking at things like, the size of the user base, the viability of a business model.
Which can be debatable with meme coins.
Exactly. And also the strength of the community.
Right. And we actually saw the results of that vote this week. Mubarak CZ's dog, which I still think is a great name.
It is.
Tutorial and Banana for Scale are the coins that made it.
They did. It really reflects the strong interest that's out there right now in the crypto community for these types of tokens.
Right.
Highly volatile and often humorous.
Right. But Binance also had to deal with a more serious issue this week.
They did.
An alleged case of insider trading involving one of their employees.
Right.
They suspended an employee for reportedly using confidential information about pre-launch tokens to make profitable trades.
Yeah.
And they even offered a whistleblower reward, which shows they're taking this really seriously.
They are.
What do you think this says about the kind of pressures that exist within these crypto exchanges?
Well, it shows that even in this world of crypto, which is supposed to be decentralized,
Right.
centralized exchanges still face those traditional challenges,
Right.
like maintaining market integrity and preventing illegal activities.
Right.
Their quick action and that whistleblower reward really emphasize their commitment to having a zero-tolerance policy on this kind of misconduct. It's a constant battle to make sure trading is fair and transparent for all users.
It's interesting, though, because despite this incident, Binance Wallet has actually seen a huge jump in trading volumes.
It has.
And their other initiatives like Launch Pool and Holder airdrops seem to be really engaging users.
Yeah.
It's like two different stories playing out for them at the same time.
Exactly. On the one hand, they're dealing with internal problems.
Right.
But then their user-focused initiatives are clearly resonating with the community.
Right.
They're bridging the gap between those centralized exchange services and the appeal of DeFi, which is leading to a lot of activity on their platform.
And speaking of meme coins,
Yeah.
we can't forget about the incredible volatility we've seen. Do you remember that viral video mimicking Liu Sun discussing Binance?
Oh, yeah, I remember that one.
That actually made the LUXUN meme coin skyrocket, although it did come back down pretty fast.
Yeah.
That's the power of social media in the crypto world.
It is. It's a perfect example of how fast and unpredictably the meme coin market can move.
It's wild.
It is, a viral piece of content, even something as creative as that Liu Sun parody,
Right.
can cause a massive surge in interest in trading volume. But these gains are often short-lived and very risky.
Of course.
Yeah.
We also saw the BUBB meme coin on BNB chain gain traction after Binance's He interacted with it online.
Right?
And then we even had some Ghibli-themed meme coins, Ghiblification and Ghibli CZ, appearing on Binance Alpha, which were inspired by ChatGPT 4.0.
Oh, wow.
It feels like the meme coin world is constantly changing with new trends popping up all the time.
It is. It highlights the very speculative and community-driven nature of a big chunk of the crypto market.
Right.
And it's worth noting that the SEC's investigation into that hawk to a girl meme coin was reportedly dropped.
Oh, really?
Yeah, which could suggest that regulators are willing to be a bit more lenient towards these lighthearted crypto projects.
At least for now.
Right.
Okay, let's shift gears again and focus on something a bit more on the institutional side.
Okay.
We're seeing more and more traditional financial players moving into the crypto.
They are.
Fidelity, for instance, has applied for a blockchain-based tokenized US dollar money market fund. That sounds like a big step.
It is a big step. It shows that established institutions are increasingly exploring how blockchain technology can be used for traditional financial products.
Right.
Their on-chain money market fund, which invests in U.S. treasuries and uses the Ethereum blockchain for record keeping,
Right.
is a perfect illustration of this convergence. For the average person, this could mean more seamless and possibly more efficient access to traditional investments through blockchain.
Right. And BlackRock has launched its first Bitcoin ETP in Europe.
Yes.
That's another big move to make Bitcoin more accessible to institutional investors in that region.
It is. It reflects the growing global demand for regulated and easy-to-access Bitcoin investment products.
And then the CME Group is partnering with Google Cloud to explore tokenization.
Yes.
It seems like the future of traditional market infrastructure could be significantly enhanced by blockchain technology.
Absolutely. Potentially leading to greater efficiency and new types of financial instruments.
And we're even seeing innovation beyond just Bitcoin and the big players. DigiFT in Singapore launched the first on-chain index fund that features tokenized AI stocks.
Interesting.
That's a really cool mix of two very innovative sectors.
It is. It shows how tokenization can be used to divide ownership and make assets that were previously less accessible more available to a wider range of investors.
Right. And then there's the launch of Kita Network, which is a new Layer 1 blockchain that has support from Eric Schmidt.
Right.
And its price has surged since it launched. This shows that there's still a lot of innovation happening, and investors are interested in new blockchain infrastructure.
Absolutely. And on top of that, the approval of tokenized HKD and USD money market ETFs in Hong Kong by Hashkey Group and Bosera International further highlights the increasing acceptance of tokenization in mainstream finance.
And maybe one of the most surprising announcements was GameStop's plan to invest in Bitcoin.
Yeah.
That feels like a pretty big strategic shift for them.
It does. It definitely represents a big change for a company that's been traditionally focused on physical video game retail. This move into Bitcoin could be their way of trying to tap into the crypto asset class for potential growth and maybe even connect with a new, more digitally savvy audience.
Interesting.
It's a high-risk, high-reward strategy.
Absolutely. Okay, let's dive into the world of DeFi. Things are rarely quiet over there.
They are not.
We're seeing automated trading solutions using AI like DeFi and Hayanon.
All right.
Which sounds like it could make sophisticated trading strategies available to more people.
Yeah, that's the idea. These tools are designed to make advanced trading techniques more accessible.
Right.
By letting users define their trading parameters using natural language.
Interesting.
It's a fascinating combination of AI and DeFi.
Right.
With the potential to automate trading and maybe even improve risk management for everyday users.
Right.
But it's really important to remember that AI in trading isn't perfect and it has its own set of risks.
Of course. On the other hand, DeFi has had its fair share of drama this week. Airdrop controversies surrounding Movement and their co-founder, Rushy, having to address concerns from the community.
Right.
Airdrops can be a bit of a mixed bag, can't they?
They can. They're often meant to build a community and reward early supporters.
Right.
But they can also be open to manipulation and controversy, as we've seen with Movement.
Right.
Making sure things are fair and preventing abuse by people trying to game the system are still big challenges for these kinds of initiatives.
We also saw Arbitrum DAO discussing the possibility of pulling funds from their Gaming Catalyst program.
Yeah.
Which suggests maybe there are some issues with their initial plan to support blockchain gaming.
It does highlight the challenges that DAOs face when making strategic investment decisions and the need to constantly evaluate and adjust their programs to make sure they're actually achieving what they set out to do.
And unfortunately, we had more security issues in DeFi this week.
We did.
Abracadabra's GM Cauldron's product got hacked.
Right.
And the Infinity team reported theft from their Morpho MEV Capital Vault.
Yes.
Plus, that Polymarket Oracle manipulation attack has really stirred things up in the community. It seems like security is a constant worry in this space.
It is. These events are a harsh reminder that there are still inherent risks in DeFi.
Absolutely.
Vulnerabilities in smart contracts, the possibility of oracle manipulation, and even very sophisticated attacks targeting specific protocols are ongoing challenges that the DeFi ecosystem needs to keep addressing to build trust with users.
Absolutely.
And, the Infini hack targeting an MEV capital vault, which is designed to take advantage of profitable trading opportunities, shows just how sophisticated these attacks are becoming.
Yeah, it's a bit unnerving. On a more positive note for DeFi, there's been talk about Morph as a consumer-level blockchain in the Layer 2 space.
Right.
Sounds like they're aiming to make blockchain tech easier for everyday use.
They are focusing on making blockchain more user-friendly and accessible for everyday applications. Is crucial for getting more people to use it beyond just the hardcore crypto community. Layer 2 solutions like Morph are really important for solving those scalability and usability issues that have held back wider adoption in the past.
Switching our attention to the global crypto landscape, it looks like South Korea has seen a big increase in crypto investors.
They have.
And a large portion of them are over 50.
Interesting.
That's a pretty interesting change in demographics.
It is. It suggests that crypto is being adopted by a wider range of people, maybe driven by things like retirement planning, or the need for alternative investments in a low interest rate environment, or just a growing awareness and acceptance of digital assets across different age groups.
Kents, we also saw Pakistan making plans to attract Bitcoin mining firms, and China needing to develop its own stablecoins. This shows how different countries are approaching digital assets.
It does. These developments highlight the diverse regulatory landscapes and strategic priorities that are emerging around the world when it comes to cryptocurrencies.
And South Korea has even implemented a 0.6% regulatory fee on crypto exchanges. It's fascinating to see the different approaches governments are taking.
It is. And Taiwan's draft of the Virtual Asset Service Act also shows the ongoing efforts to create clear legal frameworks. Although putting it into practice faces its own set of challenges.
And even at the exchange level, Gate.io's European subsidiary has rebranded to just Gate.io. They're probably going for a more unified global brand.
Most likely. It's a common step for companies as they grow and want to be recognized more widely.
When it comes to security and transparency, it's good to see Bidget showing off their high asset reserve rate and releasing their proof of reserves report. This kind of transparency is so important for building trust, especially after some of the collapses we've seen.
Absolutely. Showing that they're committed to holding enough reserves is key to reassuring users and building confidence in the stability of exchanges.
And the fact that cross-border fraud and money laundering case involving virtual currency was uncovered in Taiwan emphasizes how important it is to be vigilant against illegal activities in the crypto world.
It does, and it also highlights the importance of international cooperation in fighting it.
Finally, we had some noteworthy Bitcoin events this week. It hit block height 888,888. Which sparked a lot of symbolic discussions in the community.
It did.
And we saw a Bitcoin whale move a huge amount of Bitcoin that had been held since 2016.
Wow.
Plus, Mt. Gox has been making some Bitcoin transfers, which always gets people talking.
It does. These are all events that the Bitcoin community watches very closely.
Of course.
Hitting big block heights often has symbolic meaning for early adopters and those who are into the technical side of things. While big whale movements can sometimes hint at potential changes in the market.
Interesting.
The Mt. Gox transfers are especially noteworthy because of the exchange's history and the ongoing process of distributing funds to creditors, which has an impact on the overall supply of Bitcoin.
So to wrap up this deep dive, it's clear that the crypto world is still incredibly dynamic and multifaceted.
It is.
We've covered big regulatory developments, growing institutional interests, the ongoing meme coin craze, important innovations and challenges in DeFi, and a truly global perspective on the adoption and regulation of digital assets.
We have.
It feels like the lines between traditional finance and this new digital world are becoming increasingly blurred.
They are. The developments we've talked about today show a rapidly changing landscape where traditional financial systems and digital assets are integrating faster and faster.
Absolutely.
And the ongoing regulatory developments worldwide will definitely play a huge role in shaping where this all goes.
And that brings us to our final thought for you today.
Okay.
With this growing intersection of traditional finance and digital assets and the constant evolution of regulations, What do these trends tell us about how cryptocurrencies might become a bigger part of our everyday lives? What new opportunities and challenges might arise for individual users and the broader financial system as these two worlds continue to merge?
That's the question.
It's definitely something worth thinking about as you navigate this ever-changing landscape. Thanks for joining us for this deep dive.
Thanks for having me.